Good afternoon, this is Sean Golden with Golding & Golding, here to discuss the basics of how the tax laws work involving the United States and Taiwan. While the United States has a tax treaty with countries like China and Thailand, there is no tax treaty between the United States and Taiwan. That makes it utterly unnecessarily complicated when it comes to certain tax issues. In addition, because of certain currency restrictions in Taiwan and the way the tax work there, it can be somewhat complicated from a U.S. perspective. Generally, if you're a U.S., step back, right? U.S. taxes you on your worldwide income, makes U.S. persons report their foreign assets, accounts, and investments on different forms. So what does that mean, right? Sounds like a whole bunch of gibberish. If you're a U.S. person, that means you're a U.S. citizen, legal permanent resident, foreign national who either here on a visa or otherwise meets the substantial presence test. No exceptions or exclusions apply. They can apply, but if they don't, then you're stuck meeting the substantial presence test. As I said, there's no tax treaty, right? So generally what happens is any income earned from Taiwan, whether you reside there or here in the United States, is going to be taxable. If you have some foreign tax credits, you can normally apply them in the U.S. Accounts, assets, and investments are going to be reportable on things such as FBAR, which is FinCEN Form 114, FATCA, the Foreign Account Tax Compliance Act, Form 8938 for most people, PFIC if you've got mutual funds or other possible holding companies, and there's various other forms. One very common issue with Taiwan is if people in the U.S. are receiving a gift from a foreign person, even a relative from Taiwan, it could become reportable, and if it's not reported properly on Form 3520, it could result in significant fines and penalties. Some of the more common issues that we deal with here, your regular bank accounts and investment accounts, mutual funds, stock accounts, private limited type of investments, and then you have various corporations, entities, partnerships, things of that nature. As I mentioned before, gifts to U.S. persons is also a big issue. Countries such as Taiwan, China have things called currency restrictions that limit the amount of money that can come out. So a very common question we get here is, hey, I want to transfer out a $2 million gift, but it was actually 40 people who transferred $50,000. I didn't get one gift of more than $100,000 from any individual. Is that reportable? The answer is going to be yes, because the gift came from one person, your sweet grandma, right, who wanted to give you some money because you graduated grad school and now you need to buy a house, right? And you're probably maybe you're in San Jose, and it's $2 million still gets you nothing, but you need that influx of money. Some of the common forms that you have to file, I kind of went over it a bit, but the forms here listed on our sheet on YouTube are the most common forms, right? And if you don't file those forms timely, you could be subject to significant fines and penalties. The FBAR is the most common, if for no other reason because it has the lowest threshold for reporting. If any day of the year you have more than $10,000 in annual aggregate total in all of your foreign accounts combined, not per account, then you have to file the form. If you don't file the form, you may be subject to some significant fines and penalties, although a recent case, U.S. versus Boyd, may limit the amount of non-willful FBAR penalties depending on the facts and circumstances. If you have income, assets, accounts, other investments in Taiwan and you haven't reported them, the IRS hasn't reached out to you yet, you may qualify for one of the disclosure programs. There's the Voluntary disclosure program, which is for people who are either willful or cannot qualify or can't certify on a penalty of perjury that they're non-willful. Please don't automatically assume you're willful because you read some garbage online. You should speak to a couple of different tax return specialists and get a lay of the land. There's also things like the streamlined procedures for people who are non-willful, reasonable cause, and delinquency procedures. If you're out of compliance, do some research. We have lots of information available on our website. It's goldinglawyers.com. We have a couple of sub-websites as well dedicated to specific aspects of reporting and tax. If it's appropriate, please reach out and schedule a reduced fee initial consultation. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.